Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very decent day in the markets today and that you had a very nice weekend as well. And in today's markets, guys, well, it was another very rough day if you were a tech investor. Although the SPY wasn't down too much, the damage was done mostly in the QQQs and especially in a lot of the high beta names, many of the data center plays and AI related names, and just basically pure volatile growth names were down again an absolute ton, ranging from 5 all the way to about 17% here for good old APLD. Now, I'll show you guys a tale of two very different markets at two different all-time high periods. Number one, you might have remembered this one back here in late October. This was a period of time where the tech trade was absolutely booming. OpenAI was throwing money all over the place, and most of the gains were very concentrated into either big tech or small cap tech associated with AI. And then we have this all-time high right here, which is a little bit different. And I'll explain why these two all-time highs are very different and why this one is actually a little bit better fundamentally for the markets, even though we have been sliding in the past few weeks, especially on those tech names. You might remember in terms of back in October, we were warning about the concentration risks into AI. And if you took a look at the percentage of stocks above their 20-day EMA back then, you will see that we were all the way down here. Under 40% of all stocks were above their 20-day moving average. The same can be seen in terms of the percentage of stocks above their 50-day moving average. We were all the way down here, very low, at relative lows, where you tend to get a topping out in the market sometimes when the breadth is not there. And last but not least, the percentage of stocks above their 200-day EMA, that was also very close to only 50% of the market was doing most of the lifting. Now, the times have changed. The percentage of stocks above their 200-day EMA, we're all the way up here at about 60%, right? The percentage of stocks above their 50-day EMA, if I can just find the chart, there you go. We are now here at about 60% as well, and short-term momentum as well, all the way up here at about 65%. So you can see not all time highs are the same, but this one is arguably much better because we are starting to see the rotation. So yes, although our tech plays have been bleeding quite heavily in the past few months since October, many of them have just not recovered, right? We had some few bounces here and there, but for the most part, they have been net down since that time. The rest of the market is finally catching a bid, and we have been explaining why in terms of since last week, since we got Jerome Powell and the good old summary of economic projections, which showed that the projections for the economy in 2026 were revised to the upside. The unemployment rate still not falling off a cliff in terms of the projections, and even inflation results said to be coming down into 2026 after the one-time effect of tariffs kind of starts to work its way into the economy. And as such, your heat map looked something like this today, to where there were a lot of names, guys, that were participating very nicely to the upside, mostly concentrated into the bottom half of the market. Basically anything except for big tech and the data center and the AI trade. So, although your tech-heavy portfolios may be bleeding, just focus on the rotation and the health of the market breadth. That's what leads you to believe that the markets are indeed relatively healthy as opposed to not, right? So, in today's video, we got a lot of things to talk about, mainly in terms of that rotation as well. So, in part number one of today's video, we'll be bringing you guys a few notable news headlines that came out today that I think could be very interesting. Number two, we're going to go over the index analysis here. Very important to monitor this rotation very carefully, because if it was a broad market sell-off, well, then the SPY would be down a whole lot more. It would not only be really concentrated into the Qs and especially semiconductors after the whole Oracle and Broadcom earnings of last week, which is still having some lasting effects into this week as well. So we'll pay attention to this rotation and do some technical analysis on the indexes and derive where we might be heading into the end of the month of December. Thereafter, we will do the exact same thing, this time on our tech names. And sadly, tech really didn't have a great day today, except for Tesla. Tesla's doing pretty good today because of some robo-taxi news, which we'll cover, but the rest of tech kind of bleeding out. Now, some of these tech names have been clipping into all-time highs in the recent weeks, such as Apple and such as Google, but a lot of them haven't done anything, guys, at all since the month of November, right? So we'll take a quick look at these big tech names and derive, are some of them in good trading locations yet? Should we wait a bit more? Or are some of these in very nice buy the dip opportunity locations for our long-term portfolios? And at the end of the video, yes, of course, we will once again review our biggest gainers and losers. I'm pretty sure you guys already know where I stand on a lot of these names, especially focusing on the monthly charts and the fact that the consolidations on these names may not be finished just yet. But we'll also take a look at what were the biggest gainers of the day, because you'll see some names up here which haven't really done much over the course of this year or haven't received that much attention, but they've been receiving a lot of attention in the most recent few weeks if you're kind of looking under the hood and paying attention to that rotation. So that's going to be it for today's video. Should be another interesting one. Let's get right into it. So today, the SPY down about 0.15, the Qs down 0.5%, and look at the futures market right now. SPY futures down 0.5 and the Qs down 0.76. And that is before we get a barrage of economic data into tomorrow. Tomorrow is the biggest day of the week. And in Saturday's video, and even yesterday, Sunday's top 5 options video, I was telling you guys, if you wanted to trade this week, it's probably better to wait until all of this Tuesday data comes out so that you can have a better idea of whether or not you want to position into the Christmas holiday break. Today was a bit of a low volume day. We had a few Fed speakers, yes, but tomorrow we get double non-farm payrolls, right? Both job reports from October and the month of November as well, coming out with the unemployment rate, and additionally, some extras, right? We get retail sales, you get manufacturing PMI, you get global services PMI, and then on Thursday, you get the good old CPI, and additionally that day, you are going to get the results from the Bank of Japan rate decision as well, whether or not they increase interest rates or not, right? So that being said, a very busy day for tomorrow, and take a look at the expected move. The expected move from the options market today into tomorrow is about 0.7%. Now, dare I say, that seems to be a little bit light, but for the end of the week, we're about to move 1.54% in either direction. And this is on the Qs. The SPY is going to be a bit less, but I do believe these numbers could be a little bit light. If tomorrow's jobs data is really not favorable, and the markets already, you know, are very fragile right now, you might be able to see an even bigger expected move over the course of the week. Of course, if the jobs data is very favorable and you also have a very fragile market, it could lead to some very rapid buy the dip opportunities as well as people just pile on, because now the uncertainty levels, especially around big tech, are very high. And we've just had a lack of positive catalysts surrounding tech. So if you do get this one big positive catalyst tomorrow from the jobs market, expect people to buy the dip. All right. And as a result, I do believe that these swings that the market is pricing in here, I do believe, at least in my personal opinion, these might indeed just be a little bit light, as there might be a lot of people on the sidelines either way, just waiting for something good to possibly position. If you take a look at the heat map, we already described what was happening today. But once again, similar to the last 1 week of performance, look at the last 1 week. Say this is the last 1 week, relatively speaking, yeah? A lot of the market, large swaths of the market, performing excessively well. What has not performed well at all? Well, all of big tech, and especially the semiconductor names. Special shout out to Oracle and Broadcom. If you want to blame somebody on the most recent decline on tech, you can definitely blame them, right? And it all had to do with OpenAI timelines. So you remember back in the day, September, October, OpenAI could do no wrong. They were just throwing a whole bunch of money around everywhere. And now people are questioning whether or not they're actually going to have the money, or what are the timelines for all these data centers being built. As I've been saying in the most recent few videos, guys, it's very simple why the tech trade is exhausted right now. What happened this year is there was a big pull forward in expectations, right? All throughout the early portion of the summer into the fall, you had big tech companies throwing a whole bunch of money around for CapEx. Everybody was super bullish, going all in on companies like this, right? All of these data center plays, AI plays, whether that's software or infrastructure or components, etc., right? And then most of that spending will be used for data centers which are being built right now, most of which will be operational late 2026 into 2027. So this is the actual phase where we get to finally see some of the revenues from a lot of these data center plays, yeah? What happens here in the middle? Well, here in the middle, we have what we call a catalyst vacuum, where there's going to be a bunch of speculation. Is the AI trade dead? Is it still alive, right? It just opens the door to too much speculation. And any delays in data centers, such as the news we received from the Bloomberg report on Oracle that they subsequently denied on Friday, right? In terms of pushing back timelines for OpenAI data centers, any piece of news, okay, is always going to lead to negative sentiment, because we don't really have any bullish catalysts right now. People are just waiting for this. And while we wait, we are greeted with more and more negative short-term headlines surrounding AI. Now, I'm still very bullish on AI, of course, but I do recognize what phase of the cycle that we're in right now. We're in a bit of a waiting period, right? The actual build-out period, where now the focus is not so much on hopes and dreams for the future and large amounts of money being secured in the form of deals. Now you're in the execution phase that arguably matters a whole lot more. So when I look at the heat map and I kind of have that thesis that we just discussed, I think that this positioning right now is very normal. And you also have very nice broad market rotation, which we've been waiting for a long time, which is why I'm still fairly bullish on these markets overall. Of course, it is hurting our tech-heavy portfolios in the short term, but I would rather see this style of market where the whole market is expanding except for tech, rather than a highly concentrated one, such as the one we had end of October, whereby only the names that are red right now, they were the only ones that were green back then, and the whole rest of the market was doing absolutely nothing. That's in terms of the 1 week, but today, another iteration of a type of move like we've been seeing in the past 1 week's worth of trade. Moving on to the 1 day relative performance, you can see that even better to where most of the market was in the green. The ones that were lagging, technology, energy, and communication services for the most part. And I'll remind you, communication services is largely Google, Meta, and Netflix. Those are your heavier weights in that whole segment right there. And on the 1 week, as I showed you on the heat map, right? Well, here's another graphical illustration of that. Technology, communication services, and energy down the most. However, the whole rest of the market is there to pick up the slack. And believe me, if it wasn't over the past week, we would be much lower on the S&P 500. So we will see what we get in terms of tomorrow's macroeconomic releases. It's going to move us in a very big way. Additionally, you have to pay attention to Micron earnings. You know, the semiconductor earnings and tech earnings haven't been so good over the course of this cycle. They've reported great numbers, but they've just come down subsequently, right? Think of NVIDIA. NVIDIA reported really strong earnings and only went down. TSM reported excessively strong earnings back in October and kind of only went down from there. We could talk about Broadcom. We did talk about Broadcom last week. They had really good numbers. Market didn't care. They highlighted a few things from the earnings call and sent them lower. Oracle, same concept, right? Not enough certainty in terms of construction timelines and output timelines for data centers during their earnings, and as a result, just only went straight down. So many examples of solid companies that just did nothing but go down since earnings. Microsoft, too, had very nice earnings and have gone down ever since. So will Micron be the latest iteration in a very solid company with explosive growth into the future, right? It's not just me. Like, you look at these charts, right? Explosive EPS growth, explosive revenue growth. We know there's a constraint on memory supply in the markets right now. If Micron drops after earnings, it is once again going to add a piece to the uncertainty bubble surrounding AI right now, right? So that being said, just pay attention to it. Micron is another name, and I tell you guys to be wary of this stuff, right? Another name that is super extended from its short-term moving averages. They all were. Broadcom was super extended from the 12 EMA. Look what's happening right now. They're using any excuse in the book that they can find to drop this stock. Oracle, after that OpenAI deal or the $300 billion in RPOs, right? They were super extended. They've used every single excuse in the book to pull this one lower. Microsoft after earnings was also very extended from the 12 EMA. Every excuse is possible, right, to bring this one down. And so many other examples of this, guys. NVIDIA is way up here after the GTC, super extended. They've used every single excuse in the book to kind of pull it down. It just means that, you know, when there is a pretext available that we can consolidate these names, the market will often use that pretext and magnify the pretext as well, which will put more weight behind these bearish short-term catalysts that we've been discussing, right? The AI bubble narrative right now, they'll use everything. The technicals being stretched, the jobs creation softening, the consumer data obviously being quite soft, the private credit and bankruptcies, the yen carry trade, everything is relevant right now, especially over the course of this week, to possibly send the markets into a bit more consolidation and really take the life out of the AI trade overall, even though you guys know probably, and I know as well, the numbers are very real. The efficiency gains are very real, right? Of course, a lot of these companies spent a whole bunch of money, but the revenues and the efficiency gains are definitely coming. And the AI build out is nowhere close to being over. We're talking about the next 2, 3, 4, 5 years, essentially, right? However, in the short term, the market will use everything it can to kind of shake out a lot of that froth that was into the markets into late fall. And, right, in the meantime, well, since we have bullish tailwinds, the market will be reallocating money to a lot of these, you know, underloved sectors throughout the year. If you guys think that the market outlook was so bad, do you really think that the institutions would be bidding up things like discretionary, defensives, industrials, healthcare, and especially financials and the banks? Probably not, right? So you always got to see through the noise and understand what's happening in the market. It doesn't mean that we're going to stop dropping right now. You can drop a whole lot more, essentially, especially in tech, because they created so much room for us to possibly drop, but just something to focus on and keep an eye on that will get you through the red days. If you're able to kind of see through the noise and continuously build positions in high quality, very predictable and consistent companies overall, right? Such as we were describing all year, you know, like the companies like SPGI, companies like Moody's, companies like Visa, companies like MasterCard, companies like Booking.com. A lot of those companies did absolutely nothing all year, but they're coming alive into the end of the year. But unfortunately, a lot of the tech companies that performed really well this year, they're seeing some profit taking, and there is a lot of room to continue this profit taking into the end of the year, guys, right? Look at your year-to-date performance. Look at all of these gains. There's still a lot of room for people to take gains off of the table. Now, of course, a lot of these names were up a lot more just a few weeks ago, dare I say a month and a half ago at this point, but still, just goes to show there's a lot of profit taking that can be taken in a lot of our favorite tech and AI related names. So please keep that in mind into the end of the year overall, but also keep in mind the rotation that's currently underway. So before we get into the actual technical analysis portion, let us dive into a few news events that happened today that I figured would be notable to bring up to you guys. Number one is going to be this one right here. The FTC in 21 states are suing Uber over Uber One, saying the company enrolled people without clear consent, charged after free trials, didn't always deliver the promised $0 delivery fees, and made cancellation a maze of screens and clicks. That being said, that's why Uber is down about 3.82% in the short term, right? However, Uber is a very high quality long-term bet for me, especially. So I will be looking at these dips, willing to add more to my portfolio slowly but surely as they consolidate this company more and more and more. Moving on to article number 2. Ford will stop making the all-electric F-150 Lightning and is taking a $19.5 billion charge to write down EV investments. The Ford CEO coming on to CNBC today and saying, basically, we're done with EVs. We can't compete. The cost per vehicle is too high. The demand is slowing. The resale value of their vehicles is not the best at all. And just the take rate of these vehicles over ICE vehicles has been getting lower and lower and lower since 2020 and 2021. So Ford saying enough is enough. It's a big win for Tesla, though, but just goes to show you how hard it is to compete in the overall EV market at scale and with pricing power. Moving on to the next one here, the NASDAQ expected to move to 23-hour trading per day. So all you guys that love watching the charts at all times throughout the day and night, well, maybe this one is for you. 23 hours a day, 5 days a week, and we'll file with the FCC on Monday to get it approved. 4 a.m. to 8 p.m. and a night session from 9 p.m. to 4 a.m. Don't watch the charts too much, guys. I know it's addicting, right? But I might miss the time where the market would indeed close at 4 p.m. and give everybody, time with their friends, their family, and just time to kind of decompress from the very stress-filled landscape that can be the market sometime. But I thought that that was fairly interesting. They've been talking about it for a while, and now they're probably going to finally do it. Another one here, PayPal has applied with the FDIC and Utah regulators to form PayPal Bank, a Utah industrial loan company aimed at expanding its small business lending after already providing more than $30 billion in loans since 2013. So PayPal applying to become a bank. Who knows? Maybe that's going to be some catalyst to lift their stock price, because definitely we haven't had much lift on PayPal stock this entire year so far, but I did think that that was another interesting piece of news to bring up. We'll keep an eye on this one as the story evolves over the course of the next few weeks and months, of course. Moving on a little bit further, the US suspends the technology deal with the UK, unfortunately, that it had signed previously in September, pausing planned cooperation on AI, quantum, and nuclear. Per the Financial Times, Washington is frustrated over the UK's non-tariff barriers and limited progress on food and industrial market access, all of which were discussed during the tariff negotiation period just a couple months ago. Though both sides say that talks are still ongoing and that the wider relationship remains intact, but definitely this was a piece of news that did not help the overall AI trade over the course of the day. A couple more here, guys. Elon Musk saying Tesla is now fully driverless with robo-taxis in Austin with no occupants in the car. And here you go. Here's a Model Y with absolutely nobody in there. So that is probably why Tesla had a very big lift over the course of the day today. The continued rollout of their robo-taxi network and the continued march forward towards scaling the product after months and months and months of testing with an actual physical safety person in the passenger seat, now we're finally starting to see the initial rollout of, well, robo-taxis, essentially. Well, this is going to be very fun. I'm looking forward to seeing maybe some cyber cabs on the streets come into 2026. Moving on a little bit further, a couple more for you guys. Some statistics now. Google searches for AI bubbles is declining from the recent peaks. Look at that, right? So everybody was concerned about the AI bubble leading into the October and November period, and now people don't seem to be concerned anymore. Is this just AI exhaustion? Are people just done with AI to the point that they're not even searching for it? Or have the concerns come down a little bit? I think it might just be a little bit of both, right? AI was front and center for a very long time. It is still front and center right now, but I do believe there's a lot of exhaustion in this trade, especially from retail traders that keep getting pushed and pulled around. The institutions are still very clearly positioned, right? But they have a more long-term focus, whereas retail traders kind of jump in and out of whatever's hot right now. And you would assume that a lot of this search traffic does come from retail overall, just kind of following the media narratives that come up every now and then. And now lastly, SpaceX. SpaceX has initiated a bake-off to select which investment banks will be the advisors for their IPO, which is expected to be in 2026. Now, that being said, guys, it's official. There were some rumors last week of a SpaceX IPO potentially into the $1 trillion range. And now those rumors are confirmed true by Elon Musk himself. They will be possibly looking, well, not possibly, they will be looking to take the company public into 2026. So question for you guys, maybe down below in the comments, would you buy SpaceX if it comes out in the public markets? Now, of course, you guys know that it's probably going to get bid up and you probably have to wait a 3 to 4 month period before, just like all IPOs go up initially, then come all the way down. Would you guys be interested in possibly buying SpaceX after their IPO? Could be quite interesting, right? So those are a few pieces of news that I thought would be interesting to bring to our video tonight. Now, that being said, let's get into the juicy stuff. Let's get into some charts. Now, as always, guys, the goal of this technical analysis is not to predict exactly what's going to happen. Are we going up? Are we going down tomorrow? How much? No. The goal is to identify reaction zones for the market and establish what needs to be done or maintained to retain control or to lose control, right? So we can see on the SPY right here, we are starting to undercut some of these lows. And as a result, if you do undercut these lows, the daily uptrend will officially be lost, which means that you're going into weekly consolidation. Now, weekly consolidation might seem like a very aggressive term, but all it is just very healthy market pullbacks, right? We know that we've maintained this weekly uptrend this entire time. The weekly higher lows are currently still down here at about 655, equal lows with the China tariff drama back here. And as a result, the bulls have an absolute ton of space. If you want to consolidate, well, maybe a natural location to consolidate into would be all the way down here. 674 down to about 666 is the target range. That is the 12 EMA, the closest support that you have. And with such a very nice bounce, it's going to take a lot, especially if this rotation maintains to where we have the bottom half of the market. It's going to be really tough to end up with an absolute disaster into the end of the month of December. So keep that in mind. Will tech have a heavy impact on this pricing? Yes, but a lot of the tech names, guys, are getting into very fair market values shortly and soon. And that being said, you probably will expect there to be some buy the dip activity, right? It's not as if we're like back here where, you know, a lot of these tech names were printing highs. I mean, if you just go through the Mag 7, right? Apple off its highs, but still, Apple is just one. And the only other one is Google that is relatively close to highs and that can see a bit further pullbacks because of how high it's rallied so far. But I mean, look at the other ones, right? Amazon trading at a very fair valuation and good consolidation levels right now. Microsoft significantly off its highs. Look at these pullbacks from the highs, guys. They're significant, right? Microsoft already down 15%. Netflix already 30% down off its highs. NVIDIA hasn't done anything since July and has a very nice valuation. We'll get into the valuations later, but I just want to raise the point, right, that a lot of these companies are finally starting to trade down into relative fair value areas. Now, Tesla is doing its best to kind of uphold the side of tech. Now, it's at its all-time highs, right? But I just want to show you that, you know, you have a lot of names, even like Meta. Meta is still down, what, like 20% off its all-time highs right now into a very cheap valuation. So it's not as if the SPY is sitting at all-time highs and all our tech names are trading at 40 times forward earnings. That's not the case, right? And we also do have very nice market breadth. So although tech has been really struggling recently, now that being said, the valuations are getting really attractive. So do we have the juice to plow down into here or something like that? Probably not, but will we have some short-term concerns surrounding AI, and will it be a very volatile environment? Yes, but just pay attention to that rotation. On to the Qs right now, the subject of a lot of the pain recently. Now, once again, into daily consolidation, attacking the support range, which is 613 down to 605, right? Prior resistance, prior consolidation area, resistance again, and now we're moving down into it once more. That being said, no new all-time highs, right? But a very nice bounce. So the higher lows are all the way down there, 583. So we do have a lot of room here to probably set up some higher lows and go for the trend change finally, or maybe just sideways consolidation, kind of exactly like we had last December. You might remember when Jerome Powell killed us December 18th of 2024, and we kind of went into this very awkward sideways action here for a while before expanding, and then we got hit with the liberation tariff events, right? Back-to-back tariff events overall. So I think we're kind of shaping up probably more in a market environment that's going to look a bit more like this rather than something like this where you have just a whole bunch of macro and a whole bunch of uncertainty, which makes us just fall off an absolute cliff, right? A lot of the damage is really concentrated right now into one aspect of the market. It's a big aspect of the market, of course, but a lot of that is currently sentiment driven, right? It's not as if a lot of these companies are closing data centers or, going back on their plans to expand data centers. No, it's all about short-term sentiment right now from the few news articles that have been coming out over the course of the past few weeks, and a little bit of AI exhaustion as well. Moving on to financials right now. Financials not looking too bad, but once again, we're into daily overbought conditions right now. So if financials do choose to take a bit of a breather, they got a lot of room. Anything above 53.30, looking for a new higher low for possible further trend continuation. Now, this is where the stars might align, right? If you're looking for further drops on the SPY, the QQQ, if big tech and AI cannot come back, financials now has a bit of room to the downside, right? So if tomorrow's a big red day and financials get brought down as well, you may be falsely led into believing that's it, the market's done. No, just understand where all these things are, right? We are very nice above our all-time highs right now. You'd be looking for a weekly higher low back into previous all-time high resistance areas, looking for support and maybe for continued expansion into January 2026. So keep that in mind when looking at financials over the next few days. It's been a very nice recent few days for financials, right? JP Morgan, new all-time highs, Bank of America, new all-time highs, Wells Fargo, new all-time highs, right? But a lot of these names, guys, coming into a bit of overbought conditions. Citigroup, new all-time highs, overbought conditions. Goldman Sachs as well, all-time highs, overbought conditions. Morgan Stanley, right? Visa and MasterCard, huge pops off the bottom. So if we see some pullbacks in financials, are they healthy pullbacks? Indeed, healthy pullbacks in the context of a global uptrend. Moving on to healthcare right now. Healthcare, really nice day for healthcare bulls, right? Daily uptrend, engulfing move to the downside, and now a very nice bounce. So if they cannot V-shape this, it would be surprising if they could, right? That would require a lot of volume, a lot of continued rotation. We're seeing it right now, but in the event we get a little bit tired right here, you create a lot of space off the lows here, guys, to kind of reset the daily uptrends after they lost them here. Undercut the lows, you lose the uptrend, now you got to get it back. One way of doing it is just blasting through the top and resetting it up here. The other way is the two-step process, which is far more likely when you get an engulfing move like this. So we'll pay attention to healthcare, but healthcare is not looking too bad at all. We came back down, tested the weekly 12 EMA, and we're still in the nice context of a weekly uptrend. I think healthcare will still be a very good trade in 2026. Probably not a just straight line to the upside like this, but if we get any further consolidation, I might be looking to re-explore some healthcare longs, because let's be honest, right? In the past 4 years, what has healthcare done? Not much, right? We're just starting a longer form expansion phase that sometimes gets to look like this, right? So we'll see what happens with healthcare, but healthcare probably a sector that you want to explore or maybe have some positioning in into 2026 if you're the type of person that enjoys following these styles of lengthy rotations, right? Moving on to semiconductors right now. Semiconductors struggling again. It was a huge move off the bottoms, daily downtrend, huge move off the lows, off of those November lows, and now consolidation days, kind of back to back, right? So that being said, supports down below 343. Down about 325, looking for a new higher low, possibly for trend expansion, but let's be honest, right? If there's not more clarity and more overall bullishness surrounding AI and surrounding big tech and semiconductors right now, you're probably not going to get that rapid all-time high expansion. If anything, right, maybe a probable scenario is maybe just get stuck in some form of an awkward range until we actually get more bullish catalysts. Because let's be honest, since November, we haven't really had many bullish catalysts surrounding tech. All the earnings have not been well received. Every article that seems to come out of the media is painting some of these tech companies in a negative light, trying to undo everything that they've built and kind of strived towards over the past few months. And as a result, you may just have a sideways awkward period of consolidation for semiconductors. It wouldn't look too bad. We are far extended from the 12 EMA still. So just some sideways action. I'm not saying we're going to go into something like this, right? But maybe just a period of consolidation where we battle with the narratives. That could definitely be something that I do see in the short term for semiconductors overall. They are still your market leader and still will probably perform very well in 2026. But as with everything, guys, you run really, really hot. Eventually, you're going to run into a period of consolidation. And consolidation doesn't happen without any catalysts, right? No. That being said, when you do have consolidation, usually it's because there's a battle of the narratives going on right now. Short-term sentiment starts taking over, but then eventually people remember, hey, wait, the long-term fundamentals of these companies are crazy in terms of expansion territory, right? And then you kind of get back to it when we go through maybe another earnings season or just a bullish press cycle for these names, right? Moving on to the Russell right now. The Russell, unfortunately, down as well, just consolidating. Daily uptrend right now. And now you're looking to consolidate a bit more into prior all-time highs. Previous resistance, current support, 251 down at 248. The higher lows are right there at about 250. Take those out, guys, and you open up the door for something like this, and you open up the door for much needed weekly consolidation, right? This would not look so awkward at all. If we do lose this area, I'd be targeting probably the 12 EMA. You're just looking for a weekly higher low for possible further expansion. But the rest of the month of December, especially if you can't get this list together right here, right? A lot of the small and medium caps and the sentiment towards growth, which can be expressed through the price action of Bitcoin as well, it's not really going to help the Russell, right? The one thing that's been keeping up the Russell, arguably, is just how broad of a ETF the Russell actually is. You have some industrials in there, healthcare, financials, right? You do have a lot of tech, of course, right? But if it was only tech, it would be down a whole lot more. So the one thing kind of saving the Russell from like negative 2% days back to back is probably just the sheer amount of financials and healthcare that are within that ETF overall. So please keep that in mind. In terms of the bottom half of the market, guys, I mean, continued rotation here. We're talking about this all the way since back here where I was saying consumer staples might not be that bad of a bet. It's not a sexy, it's not a very sexy ETF or a very sexy sector. But when people are looking to take some of these year-to-date gains off the table for big tech as the narrative has become more and more cloudy, well, they're going to rotate into some sectors that just have not gotten much love over the course of the year. And that being said, consumer staples is definitely one of those, especially now that we have a relatively bullish summary of economic projections in 2026. You would not be surprised if institutions are indeed rotating into staples that have done nothing for the past few years, right? Prior resistance from 22 and 2023, prior support from all of 24 and into 2025 as well. And you just haven't expanded at all. You're just stuck up here, right? So that being said, you might be looking for some possible expansion, just like healthcare, into 2026 as that rotation continues to be underway. In terms of consumer retail, same thing, right? I mean, look at all these names on the highs today. They were mostly all consumer retail, some healthcare names, of course, but look, I mean, Abercrombie, right? And some of the travel names, such as Marriott, such as Booking.com, Elf Beauty, Decker's Outdoor Brands, Airbnb, some of the airlines, right? American Airlines, some insurance companies, but a lot of these guys, exposed to either consumer retail, consumer staples, or some of the financial names that just haven't performed very well all year. That being said, pay special attention to consumer retail, guys. If the economy was so bad, if the landscape was so bad, you wouldn't see this big, broad market rotation underway right now. A lot of this is institutional money because retail is still a little bit nervous about bidding on the retail trade overall, which is very normal, but you can see a clear attempt at a monthly uptrend. And we haven't had a monthly uptrend, guys, in a year plus, right? We lost it. We've just been doing a whole lot of nothing. It's taken a while to get this back. Pay attention. Consumer retail into 2026 as well could be interesting, especially if you do believe that the Fed's projections can come true and that we will not go into a consumer-facing recession overall, right? Moving on to utilities. Utilities also not that bad of a day today. They're trying to find a local bottom right here. We'll see if they can do it. But the daily, you're going to need a lot of work to get back this daily uptrend overall. And we are still in the form of a weekly consolidation period right now. So please keep that in mind. Weekly consolidation. When in doubt, zoom out, guys, right? It's just looking for a monthly higher low. Where are we looking? The monthly 12 EMA. Just as everything, when you get too extended from the monthly 12, you kind of pull back into it. And if you guys don't know what the monthly 12 is, just use it as a proxy for the 200-day moving average, right? That's essentially what it is. We're just looking for things to kind of revert back to a very logical mean. And usually when we're buying things around a 200-day moving average, they can be very nice opportunities. So pay attention to that. Utilities try and find a local bottom in the context of this very beautiful uptrend. I'm still a big fan of betting on some energy names, which I do believe will be phase 2 of the AI rollout. Essentially, right? This year was all about infrastructure, memory names, semiconductor equipment, semiconductor themselves, right? And a few key AI winners like Palantir, et cetera, et cetera. I do believe into next year, right? They're all going to be talking about energy. Probably a lot of these energy names and even utilities might just have an even better year than they had this most recent one. And lastly, real estate. Real estate's just been pushed and pulled around with the push and pull of the 10 and 20-year yields. Take a look at your 10-year, not too good, right? 20-year as well has only gone up and up and up since those October lows overall. And that is, of course, putting a bit of pressure here on the real estate market, which I do believe could be an interesting bet into 2026 for basically the rate cutting environment, yeah? And loan demand kind of slowly upticking. Loan demand is not very fast, right? It takes a while for people to kind of ease into it, and that will be a byproduct of the 10 and 20-year yields progressively coming down through 2026. So real estate is a type of bet that you would make if you have a multi-year time horizon, right? Because over the last few years, we haven't done anything. But over the next few years, we may actually indeed be able to do something with the easing of the interest rate environment, right? So please keep that in mind. If you take a look at the VIX right here, the VIX not doing too much, right? Not saying that anything is wrong right now on the VIX, but pay attention to it, man. Tomorrow, if these news releases come out worse than expected across the board, the VIX is definitely going to spike up. The markets are going to come down in a drastic way. And you guys know what I do when the VIX moves higher. I'm going to be selling some put options on my favorite companies, looking to probably lock in some prices with maybe some 2, 3, 4 week contracts, which will get me through the holiday period, which is traditionally low volume. So I'll be looking across the board on my favorite companies, many of which I described yesterday in our top 5 options videos, in order to sell some put options against that. But as of right now, the VIX is muted. I'm just here to say, if we get a big fearful day and a renewed higher VIX, well, I'll be looking to kind of use that to my advantage and sell some put options below the market. Now, that's everything for our overall market rundown. We can move into gold a little bit. Gold, not really doing too much, right? On the Monday and even now into the Tuesday overnight session, still in the context of a nice daily uptrend, but moving a bit slow. Gold is finally moving like gold used to move before people got super bullish on it right here, right? Just very slow, methodical expansion territory right now, looking for a higher low, anything above 41.83, just looking for a new higher low, possibly for trend continuation overall. You're definitely not seeing a fear move into gold. No, that would look something a little bit like this, but this was also a lot of central banks and stuff like that, right? So we're not seeing any acceleration into gold as part of a overall fear trade. It's just a continuation of multi-asset expansion right now. So until the bulls lose this control, it's very tough to be short on this asset right here. And now, last but not least, before we move into tech, we're going to look at Bitcoin and crypto. Bitcoin, this is not looking too good, guys, right? We had the daily uptrend. And what was I saying? The entire time the daily uptrend was alive, your weekly bounce was indeed alive. And excuse me, you have to watch the size of the bounce, right? If the bulls were able to bounce 50%, 61%, then you can make an argument that, okay, we can get the weekly uptrend back, and maybe that's your monthly higher low. Well, now that the bounce size is very soft, right? Daily downtrend means your weekly bounce is finished. As a result, this is a bear flag right now, right? Only a 38.2% bounce, not even able to get above resistance, right? This whole area, we were talking about the whole 94 down about 87, bear flag, and you might just be looking for your third wave down, which might bring you to the previous lows or maybe even lower. I mean, there's some people here at 80, but realistically, the bigger one, guys, is down here, 74 down to 67. I know a lot of people don't want to hear that, but this just the expected moves, right? When you're talking about a weekly bear flag and just overall weak momentum for anything that is currently a risk on asset right now, the sentiment is just not there. It all started with the liquidation events and just has not recovered since then overall. So you may be looking for even more monthly consolidation on this chart. Moving on to Ethereum, kind of the same concept, right? Ethereum, the daily uptrend was nice, but look what happened. You just undercut your daily higher lows, right? We're still there. I mean, they have a chance to save it into tomorrow, but it's like do or die into tomorrow, right? That being said, if you lose any more, that's the end of your weekly bounce. How high did the weekly bounce get in terms of your weekly lower highs? Well, not very high at all, right? It was a 50% bounce, which is okay. It gives the bulls a chance to set up the weekly higher lows and try for the weekly uptrend reversal. But if it follows Bitcoin down, right, where are we going, guys? Probably down here, 2,500, the next area of defense that the bulls will have to put up, right? That being said, it would be a huge retracement, guys. This would be a massive give back. And if you go all the way down there, even down here, this is so tough to V-shape. It is so tough to V-shape. I'm not saying you're going to crypto winter and crypto bear market, no. But the recovery form may just be very long and drawn out one, right? As a lot of this bullishness that we previously had is now gone, right? A lot of crypto Twitter, let's be honest, they've just given up at this point, right? So we know that the retail trade has been selling off, but institutions, as I showed you a lot of statistics in the past few weeks, institutions have been buying everything that people have been selling, right? But you just don't have very nice sentiment right now across the board on crypto. That being said, that's our overall market look. Moving into our big tech names now. Okay, so talking number one about Apple, guys. Now we're going to bring up another concept that I bring up occasionally on the channel, which is intra-sector rotation. You have inter-sector rotation, which is the rotation between the various sectors of the market. But you also have within a certain sector, namely big tech in this case, where you might have a bit of intra-sector rotation, and I'll explain what I mean. Apple and Google have done a very good job of keeping the big tech trade alive as we faltered across the board on Amazon, Meta, Microsoft, Netflix, and even NVIDIA, right? So if we lose Apple, as you're seeing right now, we're kind of challenging this daily uptrend. If we start losing Apple and Apple goes into weekly consolidation, one of two things is going to happen, right? Either Apple and Google start bleeding themselves. They've been slow bleeding recently, and you can see it on Google as well. I'm jumping around here, but it's very important, right? If we start seeing further sell-offs, because these can give back a ton of room here, guys. There's a ton of room to give back on Google. There is a ton of room to give back on Apple as well, right? If they give back and you do not see money pour into Amazon, Meta, Microsoft, Netflix, NVIDIA, it's not going to look good at all, right? Then you will have broad tech sell-offs, and that will bring down the S&P and the QQQs in a bigger fashion, right? Keep in mind, Apple and Google are $4 trillion companies. If they give up as well and start following the rest of the market down, it's not going to look too good. The best case scenario for the bulls is in the event that money comes out of Apple and Google, which have been some really big winners, where the others have faltered. If the money comes out of there and we start to see some days where big tech is green and you're seeing Apple down, Google down, but the rest of big tech green, then that is very healthy, right? That is what kind of keeps the rotation alive. So pay attention to that on Apple and Google. It's been Apple and Google against the rest of big tech and recent, as recent as the most recent month and a half, right? So that being said, pay attention to it. Daily downtrend right now into support 275 down to 266. Weekly, right? The higher lows are down here, 265 around the weekly 12 EMA. However, if you give back more and you lose the weekly, you're going into monthly consolidation. Now we have a lot of room for monthly consolidation. It's been 6-7 months of very nice upside on Apple. But what I've been telling you guys about, right? We've been in monthly overbought conditions. Previously, we were in weekly overbought conditions as well, and we're starting to curl over a little bit. Additionally, Apple has been pretty richly valued overall, right? Over a 33 forward price to earnings, a 3.19 peg, and they do not have the revenue growth for these multiples right now. Have their iPhone sales been good, and should they have a very good Q4? Yes, but could we see some consolidation through the rest of the month of December and early January before their earnings and lead into something like this into Q2? Very possible, guys. So try and line up the catalysts that you have, line up the long form technicals, and derive a possible expected thesis that would make a lot of sense. Now, obviously, the bulls can just keep doing this, and that would also be perfectly fine, right? But it wouldn't look so good because eventually things do have to pull back to their 12 EMAs, and you can see Apple throughout its history is no stranger to having nice expansion phases, but pulling back to the 12 EMAs whenever something happens, right? And do we have a perfect storm of short-term tech and short-term AI bearish sentiment to lead even Apple and Google into consolidation? Absolutely. So keep that in mind, right? You know that the table is set. Moving on to AMD right now. AMD down 1.52%, completely losing the daily uptrend right now. Daily uptrend was there, equal highs, daily downtrend. We were warning about this, and we were saying if that does happen, well, you might just be going into a weekly consolidation phase, extension of the consolidation phase into a possible weekly downtrend, and you might just be looking to come down into here 190 to about 175. That would look completely natural on this weekly chart. It would look completely natural on the monthly chart as well. As all good things, guys, eventually they have to pull back. You cannot do this with the EMAs all the way down there. You eventually just run out of buyers, right? The price gets way too extended. It's nice to see that we're consolidating, right? So if you guys were looking all the way since back there, if you guys were looking for a buying opportunity on AMD because you believe in the long-term thesis, which I believe in as well, right? You got to get through this short-term noise of price action. Just focus on their EPS expansion cycle, focus on the revenue expansion cycle. The short-term price action right now is just noise. So see what I'm doing here is I'm deriving where I possibly see the stock into 2026 and 2027, and I'm using this consolidation phase, a very natural monthly higher low sequence, as a next buying opportunity at good valuations for my further swing trade longs for expansion into the next 2-year cycle. So keep that in mind with AMD. We have lost the short-term price action, and we do not have much in terms of support, guys, at all until the under $200 level. Call it 190, then about 175. Moving on to our next name, which is going to be Amazon real quick. So Amazon also getting sent down for no reason whatsoever other than it's part of the AI tech trade, right? That being said, there's nothing wrong with Amazon's business right now. No negative headlines as well. It's just getting pulled down in the mix, right? Daily downtrend, unfortunately, on Amazon. That being said, we got a nice bounce here on the weekly, right? It was a decent bounce. The bulls had a chance, but the short-term bearish narrative, guys, too strong across the board on tech. It was a nice 50% retracement. Resistance, though, was very strong. It's very tough, guys, to mount above this level if you don't have broad market tech support, right? So that being said, Amazon is going to go back into consolidation phase right now, the bottom end of which is probably under 220 here. Talking about like 216, then about 205 is the big support range the bulls have been defending for the past few months on the monthly, which makes the most amount of sense in my opinion. This is just very awkward monthly consolidation, right? We tried to expand after earnings. We got crushed from the AI narrative. So unfortunately, some bad timing for Amazon, right? But focus on the earnings. What did they tell us? They told us the business was firing on full cylinders throughout their earnings around 220. It's a very attractive forward PE, a very attractive forward PEG ratio. And as a result, if you are a long-term believer in this company, you would be utilizing this short-term weakness to add shares to your position, especially if you want to keep those shares over the next 3, 5+ years. So this market right now in terms of tech is not the easiest to swing trade, of course, nor build short-term long positions with call options or whatnot. No, this phase of the market right now in a lot of tech names is a conviction and accumulation phase, which is sometimes something that people struggle a lot with because people always want to see the instantaneous gains, but they don't want to do what the institutions do, which is long form consolidation and accumulation periods for high quality companies. So keep that in mind. Moving into Google right now, we talked about them previously, but daily downtrend erosion right now below the 12 EMA. And as a result, you do not have much support here at all, guys. There's nothing here to hold up the price, right? So can Google get dragged down in the mix? Absolutely, possibly down here to the closest area of consolidation that we had, which was like 290 down to about 275, right? You can clearly see that we have a lot of room to consolidate here on the weekly, and a lot of space above the weekly higher lows, which is 270. We have a lot of room here, guys, to consolidate, right? It was weekly overbought conditions. It was daily overbought conditions for a while there. We were warning about this. It is still monthly overbought conditions. You have a lot of room to consolidate here on Google, guys. And I do believe that that is the more likely scenario for this company that ran excessively hot. And now you might just see some end of year profit taking from either retail or some institutional funds that do take longer form swing trades on the price and things of that nature, right? And even here up here at 320, guys, it wasn't the best, right? Google was kind of at the top end of its range, 1.91 PEG. Google is not like some other companies that usually trades mid-30s multiple. No, Google usually swings between low 20s multiple and a high 20s or low 30s. So we were kind of peaking here on what Google historically does overall. So you would not be surprised to see some consolidation on this stock. Now, I'm not selling any long-term shares, but we've been very clear in saying here has been a nice location, guys. If you're up a lot on Google with swing trades or call options, there are many other names right now across big tech that can possibly be a nice opportunity to rotate some capital out of Google into some of those other names. One of those names could be something like a Meta, right? So Meta was up 0.5% today. Not too big of a day. I don't know why this candle still exists on TradingView. It never actually traded up there. You can see that on the lower time frames, right? No wick into there. So I don't know why that wick is still on my chart. It's kind of annoying. But here you go, Meta, right? The higher low section established right now at about 635. You're challenging them. Small support area, very small. There's not much here, guys. There's recent price action. There's these guys, and there's these guys of resistance, right? It's the closest area that we have, but it's definitely not as big as the whole 600 down to about 560 area, right? So that being said, it is a weekly downtrend. So if you start rolling over, guys, with the rest of the AI trade overall, you would not be surprised to see Meta once again challenge these lower areas. And I would be a big fan of once again loading up on Meta shares to accumulate for the long term. This has been a very nice period of time where we've had a very nice monthly consolidation cycle on this stock. And as a result, I will be buying, especially at Meta, 630, you're looking at 21 forward PE, a 1.63 peg. So although the short-term price action has not been very conducive to short-form call options go for crazy expansion because the sentiment is not there for that style of trade, guys, right? It will be one thing if all of big tech was printing highs and Meta would be the only one behind. Then we can play the catch-up trade with some aggressive call options. When everything is down, you can't really do that. The bias is to the downside. The bears control the weekly downtrend. You also know that we're in monthly consolidation, and sometimes that takes a while to turn around. So this is another example of a stock that's in a long-form consolidation period. If you're buying here, you have to buy with conviction. You have to buy based off the fundamentals. You have to buy based on past price action history and just wait and hold firm. But a lot of people, it's very tough for them to do that, right? Moving on to Microsoft right now. Microsoft down 0.78%. Challenging the lows, right? We try to go for the daily uptrend, rejection from resistance, 500 down to 488. And we were talking about this, right? If you break down these lows, that is your weekly lower high. In the midst of big weekly consolidation, lower high, and maybe they're going to go for the full retracement, guys. It would not be so foreign, right? Monthly also challenging right now, right? Very, very, very challenging. They had that earnings pop. And now we just drop since then. So that being said, this whole pocket here, 470, down about the 440 range, 450, 440, previous all-time high resistance, current support. Has it been a good opportunity to buy Microsoft between the 26 EMA down here and the 12 EMA in terms of historical performance? Yes. And as a result, I will be buying here, but it will be very choppy, right? This is probably the final resting place of Microsoft. If this trade continues to erode over the next few weeks, into the end of the year, it would just look like very natural consolidation. You want to go one time frame higher? I rarely ever show these. These are the quarterly time frames, right? Look what we're trying to do right now, right? Just natural short form consolidation. That's why I say this might be the final resting place for Microsoft. Believe me, I'll be loading up a lot more Microsoft if we do move a little bit down below there, and even selling some put options into this area, as I do believe the valuation on Microsoft is very, it's a lot more attractive, trust me, than it was in the mid 550s right now. And I will be bidding on Microsoft because of their long-term fundamentals, not short-term sentiment, no, because the projections for the next few years on EPS and revenue growth are staggering, right? All of your analyst price targets now cleanly above the price, so you know that you have nice upside, but it's going to take a while to turn around this short-term sentiment across the tech landscape. Speaking about short-term sentiment, let Netflix down about 1.5%. No, we didn't have any updates here in terms of the Paramount deal, right? Or rather, the Paramount and Warner Brothers Discovery and Netflix drama deal that's going on right now. So Netflix also in consolidation, still daily oversold conditions, still big weekly bear control right now on this time frame right now. We're not weekly oversold, but trust me, a little bit more, you'll get weekly oversold. When does Netflix go weekly oversold? Almost never. And when it previously establishes low RSI levels, you're getting closer to a bottom than not. Of course, this was the big bear market of 2022, but in the context of a bull market, which we're still in right now, as viewed by the SPY and the QQQ, right? In the context of a bull market, it's usually an attractive opportunity to be picking some of the lows here on Netflix overall to accumulate for the long term. I'm not saying that this is the absolute bottom. We can drop a little bit more, guys. It's full bear control right now. You can establish a lower high and flush these 90s and even go into the 80s. But you will be daily oversold. You'll be coming into weekly oversold conditions, which is why Netflix is another example of a company whereby if you're trading short-term call options without a bottom, guys, you'll probably get destroyed, right? And trading put options down here, buying puts on the stock when it's already oversold and almost weekly oversold, well, you may not get the best risk to reward, right? However, the people that will win in this situation are the people with a long-term time horizon, focusing on the fundamentals. And the fact that although you have short-term drama and short-term noise surrounding the Warner Brothers deal, well, you got very nice long-term fundamentals that you can kind of count on. The road to recovery will not be quick and V-shaped like this, no. But are we probably approaching a local bottom or a probably total bottom on the stock sooner than later? Absolutely, which is why I'm a big fan of buying Netflix right now. Moving on to NVIDIA. NVIDIA also still doing a whole lot of nothing. However, it was nice to see that NVIDIA was green today, but still, do the bulls have full control of the price action right now? No, right? Full engulfing move by the bears. Once again, above his resistance, 185 down to 178 On the weekly timeframes, it's not looking the best either. If anything, this is probably a weekly bear flag. Maybe looking to move a little bit lower. If the AI trade continues unwinding, it would not be so crazy to see NVIDIA come down here, 170 to 165. Where's that area? 12 EMA, right? Would this just look like very natural monthly consolidation? Yes, absolutely. Is the valuation on NVIDIA now very attractive? Yes, around 175. It's a 23 forward PE. It's a 1 peg, and it's a 13 forward price to sales, right? But it's a 1 peg right now on NVIDIA in light of their future revenue and EPS growth rates. I think these valuation metrics are getting very fair on NVIDIA. The growth for NVIDIA is very good moving into the future, but that doesn't solve the short-term bearish sentiment right now. So as a result, this is once again an example of a stock that short-term call options and short-term bets for instant reversals are probably not going to get rewarded. What will be rewarded are people who are buying this with longer-term conviction, willing to hold through the noise, add to their positions, accumulate to their positions, and entrust in this magnificent EPS expansion over the next few years and magnificent revenue expansion for which we literally just got guidance a few short weeks ago, but I believe people have forgotten that because they've been caught up in this bearish narrative right now. Moving into Tesla right now. Tesla, obviously that news with the robotaxis in Austin sent them over and above the top, not quite an all-time high, but very close. Now, one person asked me in our Discord today, how come Tesla has held up better than most players in the tech landscape, even though they are also associated with AI? Well, because Tesla, in my opinion, is a phase 2 AI play. They are the beneficiary of AI. They are not one of the builders of the data centers or nothing like that. They're not an infrastructure play. What they are is they're one of the long-term beneficiaries. So the long-term positive thesis narrative for Tesla right now is in full swing. Full self-driving with the robo-taxis in full swing. And we've got a lot of positive developments on that soon, right? Also, the robotics division of Tesla. Once again, a lot of focus on robotics moving to the future, especially with their Optimus personal robots, right? Additionally, we can't forget about their solar and energy storage business, which is also going to see a lot of growth into the next few years with the power demands for AI. Now, a lot of this is consumer-based. Can they reposition for commercial and industrial base? Possibly, but those three aspects of the long term, right, for Tesla are what's been contributing to it moving higher, while the rest of the AI trade has been pulling lower because they are one of the beneficiaries of AI into the future. And that is how people are trading this stock currently. Does it make sense in light of the short-term negatives surrounding their car business? You can argue that no, but once again, right, Tesla has always been a long-term catalyst story and not so much focus on the short-term car business, which is arguably funding the long-term story for Tesla, right? So Tesla looking very good in terms of price action right now. Clean daily uptrend break by the bulls. Your higher lows are still set about down here, about the 441 area. Tons of room right now. And now that we've broken above this key area of resistance, right? Well, maybe if you come back and backtest something, it would probably be these guys, right? So if you come back down, you're looking to probably backtest this area, talking about like 460 to 444. No short-term swing trades for me on Tesla right now. It's a bit too extended, but maybe if we get some higher lows, it could be a decent opportunity on the weeklies here to go for the all-time break, as the bulls do still control the monthly timeframes right now. Looking very good on Tesla, guys. If you didn't catch this one, no problem. I wouldn't be chasing this one either. But for those of you guys that were building positions down here when nobody wanted this company, or even back here, congratulations to all the bulls. I still hold some of my long-term Tesla shares that I acquired all the way back here, 2018, 2019. Now, obviously, I did sell a ton of those into the previous rally in 2020 and 2021, and I've just been holding the rest. So I'm fairly happy as a Tesla shareholder, but I get it. If you're looking from the outside, this trade probably doesn't make sense to you, and that's fine. In this market, there is something for everybody. Moving on to Palantir right now. Palantir down a fraction today, 0.17% to be specific. You know, this one's actually holding up better than most. If Palantir wasn't showing ridiculous earnings, they'd probably be down a whole lot more, throughout this whole narrative compression, right? Daily downtrend, nice reversal by the bulls, and now just looking for a new daily higher low. A lot of space here, anything above 163, looking for a new higher low. And you're kind of using this whole consolidation area to just build a frame of support right now for the bulls, looking to expand. But let's be honest, if the SPY and the QQQ keep suffering, guys, this one is probably not going to hold up. And as a result, you may just see further weekly consolidation. We're not calling for this, but maybe just awkward, wide consolidation range for Palantir as we just consolidate this monthly time frame a little bit more into some possible sideways action. We've done a good job of cooling off these monthly timeframes right now. So for me, Palantir, guys, very tough to position, right? If the whole rest of the market was super bullish, then you can make an argument to possibly go for, swing trade longs, But that being said, it's very tough to position in Palantir in this environment right now. I'd rather just sit and wait. And if Palantir comes down here again, maybe you will find me selling some short puts around the 200-day EMA. Moving on SOFI right now, SOFI down 5.35%. Does SOFI deserve to be down this much? For SOFI, probably not. You even got a JP Morgan price target increase today to 31 from 28. Now, the PayPal news didn't help them, okay? That's why they kind of sold off into the end of the day. SOFI kind of got caught up with the rest of the growth stock trade early this morning. They hovered around here at 26, and then the end of the day when PayPal renews the banking news, they kind of dropped a little bit more right there. But we've been talking about this, right? About the fact that SOFI has just been trapped in this range of consolidation, unable to break above 30 down to 28, which was about resistance for the company right now. They tried to go for the higher lows in the expansion, and now sadly, it's looking like the daily trend rollover. But if you look on the weekly and monthly timeframes, guys, you'll notice one thing, just consolidation. Some people will point out a head and shoulders pattern right here, which is probably the case. I would agree. If you come down, you're coming right down here, 25 to about $22. It's the range of consolidation. We've been talking about it for the last few months. How, if you do pull back somewhere, you're going down here, right? Prior resistance highs. These are the support lows now. The 12 EMA is curling up. And as a result, from the top to this support range, it's a nice 20 to 30% sell-off. So as a result, if you are a long-term SOFI bull and you are looking for an area to pick up some shares, this might be one that you might agree to do it. It's a 1.1 peg, a mid-7 price to sales, and you're just looking for a very casual sequence here of monthly higher lows, nice consolidation. I mean, let's be honest, guys, right? From April to those highs, the stock was up what? Like almost 4x? So it's like, how much do you want in a straight line, right? If we do consolidate a bit more, you will find me building more and more SOFI positions that I will be looking to carry for the 2026 expansion, which is a very likely scenario in my opinion. Moving on to Uber right now, we talked about the Uber news, how they were being sued, of course, over their Uber One. Now that being said, guys, daily, sadly, another daily downtrend. Unfortunately, unable to break above resistance here, 92 down about 87, and just another weekly leg of selling, right? Weekly has been in a downtrend this entire time. And as a result, your monthly time frame is just into consolidation right now. Healthy consolidation for this stock, in my opinion. Nice support down here, 81 down about 74. And yes, I will be bidding this area either with short puts or buying some shares for the long term, as I do believe that right now Uber is in a fair valuation territory. It's a 1.5 peg, a 5% free cash flow yield at a 23 forward price to earnings. So I do want to make the most of this consolidation. But you guys know, man, when you get into monthly consolidation, which is what you're seeing on a lot of these names, right? AMD, monthly consolidation. Amazon, monthly consolidation, right? Meta, monthly consolidation. Microsoft, monthly consolidation. Netflix, monthly. NVIDIA, monthly. And so many other names, right? SOFI, monthly consolidation. Uber, monthly consolidation. It's slow. It's slow. And it will feel slow, right? It will feel like you're throwing money in the fireplace for a while. But as long as you're not buying up here, and we are waiting. See, a lot of my buys on all of this stuff, guys, have only been started upon, or rather within, these monthly consolidation phases. And that's what I wait for. I don't look to buy the all-time high breakouts. No. I wait casually for things to pull back, consolidate. I build my positions, which might mean I might stay flat or slightly underwater here as I build my positions for the entire time of monthly consolidation. But at least on the other end, I'm always coming out the other end with a lot more shares than I came in to that expansion phase, right? So that's how I look to kind of play the larger swings in the market. Not so concerned with day trading anymore. You guys know that, but I do want to get the larger swings on a lot of these very high quality names. And last but not least, TSM. I mean, I could probably stay on the monthly chart and you guys probably know what I'm going to say, right? Extend it from the 12 EMA. Am I buying up here? No. Even though the valuation right now at 295 is not terrible, I just feel that I could get maybe a better technical entry for a price, which would give me an even better fundamental entry on the price as well. If you just take a look at these short-term timeframes right now, your daily, fully engulfing move, and we did get rejected at all-time high resistance, 310, then about 302. It's been rough for TSM, right? Kind of like with NVIDIA, but this is a shorter period of consolidation. NVIDIA has done this since July. TSM has done this since October. And it's probably going to look something like this, right? Very awkward moves as you have extended very far on the monthly time frame, which is why the daily is somewhat unclear. The weekly is somewhat unclear. I mean, you have support down here, 280 down to 271, right? This is true. So maybe we can just hold this range. Maybe, right? As the 12 EMA kind of catches up, maybe the price moves sideways on a monthly time frame. But if TSM gets dragged down with the rest of the trade into its 12 EMA, I'm definitely playing 250 to 240 area. I will probably be buying that location all day based on the fundamentals of the business and further expansion of the business, but also because they'll finally give me a nice technical price sell-off 20% from the highs, which has been an attractive buying opportunity on TSM, during this entire expansion phase and even in prior bull markets. Forget the bear market of 2022, right? In bull markets, 12 EMA for TSM has been a heavily recurring theme all the time. So if you just wait patiently for it, you might find the best possible match of fundamental and technical entries at the same time. And that's kind of what I'm waiting for. I haven't done anything on TSM up here. I haven't added shares to my long term. I haven't played short puts. No, I'm waiting for a bit more volatility and a bit more drop. That way I can start doing that stuff kind of in this lower area down there. If it doesn't come down there, no problem at all. I have tons of other names that I'm playing overall in tech, right? That is everything I had for you guys in terms of our big tech rundown. Now let's dive into the biggest gainers and losers. And we talked about this stuff throughout the video, right? But let's do a quick little recap. Now, a lot of people are going to be focused on this: the APLD, CIFR, Ondas, Iris Energy, ASTS, Rocket Lab, all of this stuff, right? The stuff that we cover almost every single day because that's what you guys are mainly interested. So I do a good job of trying to cover these, as much as I can on a daily basis. The critical minerals theme that's just been eroding since the hype wore off, right? What are they going for? 12-month EMA. If I pull up any one of these charts on a monthly time frame, you guys should clearly understand what we're going for here. APLD, where are we going? I don't know, maybe the 12. CIFR, where are we going? I don't know, maybe the 12. I know some people don't want to hear that, but that's just normal structure, right? It's done it so many times in the past. I don't know why this time would be any different. What, just because we have so much gains, we can't pull back? This happens all the time. Go back to 2021 and look at all the EV stocks or the battery stocks or the charging network stocks or all that stuff, right? These very volatile names may have very nice futures ahead of them. It does not mean that they will never consolidate on their monthly timeframes, especially when a lot of them were monthly overbought. Nobody wants to hear that. And right now, these trades are turning into conviction trades, right? If you bought the top, my condolences, right? But I was warning this entire time, don't do that. Wait for consolidation. But then when consolidation comes, everybody wants the dips. But when the dips come, it's because there's always something there. Do you guys really think that we would be pulling back from the tops here on some of these names 40, 30, 50% plus without bad news or without bad sentiment? How's that going to work, right? What, we're just going to casually pull back 40% from the highs when everybody is still excessively bullish and there's no bad news? No. Whenever you have pullbacks on everything, guys, it's going to come with negative sentiment. It is your job as an investor, especially if you're looking to hold these companies with a long-term thesis, it's your job as an investor to determine, to be able to determine, or rather differentiate between noise and your long-term thesis. Arguably, if you're bullish on these names in the future, these are coming into very attractive buying opportunities for a bit of a reload, right? If you bought down here and you sold up here, you're looking for the reload. Don't let short-term negative sentiment distract from the fact that a lot of these companies have huge commitments and very bullish, very bullish fundamentals coming to the next few years. Whether it's this one or a lot of people are focusing on Ondas, which I'll also be focusing on if we get a retest of the 6 area down here. Iris Energy, where are we heading? People didn't want to hear it when I set it up here, right? I said, just be careful, man. You get the drawdown, right? We covered their earnings. You guys know my thoughts on Iris Energy. They're solid, but when are they super solid? We talk about this all the time, right? When are they super solid? Well, coming into deep 2026, 2027. And now there's a bit of a period where you'll see it on the chart, right? This was the big expansion phase. All of the money was committed. This is the actual fundamental expansion phase. This period is going to be a whole lot of noise. And as a result, during that noisy period, a lot of people will lose faith, lose conviction, but maybe not some of you guys that have been looking for these entries, right? Is it going to be choppy? Yes. Can it go lower than this? Absolutely, right? But if you have a long-term thesis, these are your entries, right? These are entries. Don't think that you're just going to be able to wait until the bullish catalysts are back. Usually it happens really fast, right? So you do want to be accumulating on these dips. If I'm not forcing you guys to, I'm saying for those of you that are interested in these companies, now is your chance, right? Maybe you've wanted to buy into Rocket Lab, and once again, you kind of missed these lows. We'll pay attention to it. If it comes back down there into the 40s, it's going to suck for the people that thought it was going to expand like this, super short term. It's going to be great for the people who are looking to further accumulate positions around a nice historical level, right, into the future. And the same thing can be said about names like EOSE or, the other data center plays. I mean, CoreWeave is a bit different because they're new and they still have a lot of insider selling and stuff like that. But names like NBIS, where we can establish some prior price action, same concept, right? NBIS has so many more deals now, and literally we've unwound all of the deals. And dare I say, we have a very good chance of unwinding the entire Microsoft deal. You remember that day? I remember it when it was like yesterday. Everybody was celebrating this 50% rally on NBIS and subsequent follow through of that rally. Now everybody thinks the thesis is absolutely dead. How can we think the thesis is absolutely dead? Since that time, we've had even more deals and more commitments and more clarity on the business moving forward. But of course, no, this play is dead forever, right? No, it's just on pause for the moment, right? The money is rotating into other names, right? All of these names are the exact same, right? Now, I've told you guys what a few of my favorite winners were into the next few years. Yes, I am buying NBIS. Yes, I am buying Iris Energy. Yes, I will be buying Rocket Lab as well on the breakdowns down here. If we do come down there, UiPath is one of my new additions to my growth portfolio as well, to where I'm just looking to accumulate a lot of shares down here and going for the upside breaks eventually. So there's a few key names that I am playing amidst the sell-offs right now, right? If you look at Broadcom as well, Broadcom, where are we? We're too far extended. We covered this after earnings, right? And I know people didn't want to hear it, right, when I said that, but I know I hate saying where it could go in the short term, right? I don't want to predict things. I'm just saying if it comes down here, I'll be interested, right? If it doesn't come down there, no problem. I have a bunch of other names that I can possibly play. But if it does come down here at the 12 EMA and we get better price action, maybe it'll be an interesting time to kind of buy some of these names. So keep that in mind when you're looking at everything, whether it's Robinhood, right? Whether it's names like Spotify, they finally came down to the 12 EMA as well, right? A lot of these names are exactly the same, guys. Whether it's CrowdStrike, right? So many names, whether it's FLNC, a lot of people have been very bullish, line up a support level with long-standing EMAs, and you might just end up with a nice confluence for accumulation. A lot of these names are looking exactly the same, whether it's Reddit. If Reddit, once again, Reddit was a great buying opportunity. We covered it here when it was down here. Great buying opportunity. If they give it to you again with good fundamentals, well, maybe it's just something that you kind of just want to maybe lean into as the price kind of moves down there. I'm not trying to pick bottoms, guys. I'm not giving you guys day trade locations, right? No, I'm just telling you guys about the larger form cycles right now that are currently at play, right? Even a name like Shopify. I don't know. Come back down there. It might be interesting to revisit. We talked about it when it did come down there late November. It was on my top watch list for stocks to add to my long-term portfolios. Remember when I gave you guys 20 names to look out for? Of those 20 names, a lot of them, you might remember, a lot of them were names that hadn't done too well this year. Names like Visa, names like MasterCard, names like SPGI, names like Moody's Corporations. Well, all those names, since I published that list, like Booking.com when it was down here, right? Like Mercado Libre, which is kind of still down here, right? Some of them have rallied, some of them have not. But a lot of the more, not value-oriented, but high-quality businesses that are just not hyper growth oriented names, a lot of them, we had our lows and they're moving higher. A lot of the other tech batch of those are either at lows right now or coming into lows. So please keep that in mind. I'll do my best to bring you guys my favorite names, amongst all these names overall. But if you guys are regular followers of the channel, you guys probably know what I'm looking at, right? If you take a look at the biggest winners of the day, look at a whole bunch of these companies that nobody thought. Who would think that on a day where tech is just getting destroyed, right? Abercrombie and Fitch. Look at this move on Abercrombie and Fitch, right? Absolutely nuts. 81% since their earnings just a few short weeks ago. This is not the type of move that you expect to see if the narrative is that you're about to go into a consumer-facing recession, right? Like moves on names like Expedia. Look at this move on Expedia this year, right? Definitely not something you expect to see. Look at the moves off the lows from Decker's Outdoor Brands, which we were highlighting on the channel as well, right? Look at this move from the lows, 30%. Look at this move on Airbnb from these lows, where we were playing heavily on Airbnb. This also was a name I was telling you guys to look out for, right? 18% from the 18% from the lows. Elf Beauty, not so much, right? But other names in staples or discretionary, look at the dollar stores, right? They did nothing for years, got absolutely destroyed. Look at DG, look at Dollar Tree, right? So there is some action. It's just not in very sexy names. Look at a very unsexy name like Waste Management. What has Waste Management been doing while tech has been falling off a cliff since Oracle and Broadcom earnings? Nothing but going up higher, trying to reset the weekly uptrends after getting destroyed by the rotation into tech and the lack of market breadth. Nothing was wrong with the company back here, guys. No, just all the money was just being poured into AI, right? Look at these unsexy names setting monthly lows and now maybe embarking into expansion cycles with very high quality businesses, right? So you kind of got to see what's happening here under the hood, right? Names like Domino's Pizza, which did nothing other than get destroyed by AI. Nobody wanted it, right? Obviously, there was some consumer weakness, but the Fed gave you the roadmap for the next year, right? So as a result, Domino's Pizza moving off the highs, even names that got crushed, so crushed, like Chipotle. I'm not saying I'm bidding any of these names. I'm just telling you guys, pay attention to the rotation. It's not all of them, but some of them are getting some really nice rotation. Look at Marriott. You know, Marriott, Hilton, more of the travel names, the airlines, American Airlines, Delta Airlines, United Airlines. Look at these airlines. Look at the cruise lines as well, right? Cruise lines have had a pretty good year so far, hitting some monthly higher lows. You know, it's not all of them. Look at the insurance companies. The insurance companies got destroyed this year. Now, this was for different reasons because they pulled forward a lot of their pricing power after COVID. They had huge expansion phases. But now, if we're looking for local lows on some things, right? Look at Brown, look at Allstate. Look at Allstate, man. Since the Fed, right? Allstate, huge rally. Dare I say, even look at Berkshire, right? Berkshire has been notably higher since that Fed meeting as well, right? So you got some money rotating here across the board into several players and several key niches and narratives. Like look at some of the defense stocks, right? Look at Raytheon. Raytheon's had an amazing year, but we don't talk about it that much. Look at Lockheed Martin. Lockheed Martin from these lows, look at the past 3 weeks since tech has just been dying, right? You got a lot. Look at GD. GD as well, starting to curl up. They've had a phenomenal year so far as well. Sideways consolidation, right? So it's not all of them. I'm not saying all these charts look the same, but I'm just saying there are segments of the market that either have been performing well under the radar or that are looking to curl around after spending a year's worth of time not doing anything, or that got crushed in the last 3 months because of AI. And now the money is kind of rotating kind of back into them slowly but surely, progressively, right? So you can find some okay opportunities here. Tractor Supply Corporation, talk about nothing more than a more boring company than this, right? Nice support. They've done nothing all year for a year and a half, right? Just consolidating. Some of you guys asked me about this one. Looks decent. You know, John Deere as well. They've done nothing, but now starting to come alive and do a little bit of something, right? Just monthly higher lows, looking for maybe expansion right here. I'm not telling you guys to play this stuff. I'm just saying, right? The monthlies are expanding. So to say that the S&P is going to absolutely fully fall off a cliff and that we're going to lose companies that have done nothing all year, they're just starting potentially their big rotation phase after having done nothing for either 3 months or a year plus on all of these names, right? You are seeing some healthy rotation. And the keyword is very healthy, right? Because the market was too concentrated there for a while. That being said, small positioning into a few of your favorite names in some of these other niches that are expanding, no problem at all. But also accumulating names here, your favorite names closer to their 12 EMAs may not be a bad proposition if these are the types of names that you want to hold for the next 1, 2, 3 years, and you've been looking for a re-entry opportunity. I'm not saying these are the bottoms. I'm just saying we're coming in to the buy areas. And as a result, if you've been waiting, now is kind of the moment in time where you have to accumulate, get through the volatility, and just build your position. Focus on your share count. Accumulate and increase your share count, shares that you will want to hold into the next expansionary phase, which will be 2026, 2027, 2028, right? Try to see through the noise for some of these companies if you do enjoy them. And if you do have a conviction, if you do have high conviction into your long-term thesis, at least that's what I'm doing, right? That being said, guys, that's everything for today's video. Hopefully you guys enjoyed. If you did, consider dropping a like. Would appreciate it for the growth of the channel. And also subscribe to the channel if you're new. We do these videos every Monday to Friday after the close. Last but not least, if you have any questions, guys, feel free to leave them down below in the comment section. I always love reading your guys' questions and answering them as soon as possible. So just, you know, be on your toes out there, right? And also, I'm wishing you guys a very nice upcoming holiday period. My apologies for the late upload tonight. Been getting ready for the holiday period. It's also my birthday on Friday, so I had to do some things tonight in preparation for that. So I'll be bringing you guys the videos the rest of the week a little bit earlier, of course, but thanks for watching anyways. I know that recently I've been uploading videos pretty late. It's been a very busy last few weeks for me, so I do apologize. I'll try to get back to the normal scheduled uploads around between 6 to 8 p.m. Eastern. So take care, guys. That's it for me. See you guys tomorrow. Have a good day. Peace.